In the previous video, we looked at the windows. Now we will look at the stars, the real bodies and the shadows. Now these are fascinating candlestick patterns. The stars, the real bodies and the shadows can be used single-handedly without using any candle patterns to gauge the market situation. What this means is that if you don't know, even if you don't know any candle patterns, the knowledge about stars, real bodies and shadows can be used by a trader to understand what is going on in the market between the bulls and the bears. Okay, and I will show you an example of that in this video. So a star in an uptrend, we are first looking at a star. Okay, so a star in an uptrend. So let's say the market is going up, you have a tall white real body candle. Okay, and suddenly there is a gap up opening. Gap up opening means what? The closing of this candle is here, but the opening of the next candle is not the closing of the previous candle. The opening is slightly above. So that is called as, when the market opens on that day, it opens at a higher price. So that's called as a gap up. Okay, and the body that is created on that day, assuming that's a daily candle, it's a small real body. So this small real body, whether it is white or black, is called as a spinning top. Okay, spinning top is nothing but a small real body. Spinning top doesn't mean that it always occurs at a top. It can also have come at a bottom. Okay, so this is also a spinning top, although it comes in a downtrend. Okay, so this is called as a spinning top. The important thing is the bodies should not touch each other. So for example, if the opening would have been here somewhere, then the bodies are touching, or if the opening is here of this candle, then the bodies are touching. Here the bodies are not touching, but the shadows are overlapping. See, you can see that the shadows are overlapping here, but the bodies should not touch. So that's why this is called as a star, which is something away from the prior trend. This star indicates indecision in the market. By the time this candle opened, the bulls were very happy because here they were making money, because if they bought somewhere here, by the time this candle closed, they were making good money, and then suddenly the market opens even higher, they are making even more money. But by the time the candle closes, it's a small real body, so the bulls are now thinking, wait, what happened in the market? Something is wrong. Maybe the bears are back into the market. So the star indicates confusion and indecision in the market. So just as I use a doji to exit a current position, I use a star to exit an existing position. I do not use the star to take or initiate a new position. Okay, so remember that important point. Same applies with a downtrend. The bears are very happy. They are very happy when this candle closes. They are even more happy when this candle opens, because it's opened down. The bodies are not touching, but the shadows are overlapping. That's okay. Now here, notice that if the shadows are not overlapping, then it becomes a window. Then in that case, the candle opens like this, right? So there is a gap between these two candles. So that's a window. Here there is no window because the shadows are overlapping and the real bodies are not touching. So the color of the star doesn't matter. So the star is a small real body, a spinning top that gaps away from a long prior real body. It can come after an uptrend or a downtrend. It signals confusion in the market, signals likelihood of a trend reversal. Likelihood means after this uptrend, we don't know whether the market will go flat or it will go down, but the chances are it will not continue going up, because if it wanted to go up, then this would not have been a spinning top, it would have been a much larger candle. It's a part of other candle patterns like morning star and evening star. So when you learn the morning star and evening star in level 1 training, you will see that the star is a part of that pattern. It's a 3 candle pattern, and one of those candles is a star. And the star itself, there is exhaustive study on the star. I have made 20 videos on the star itself. So that's how deep and detailed analysis of star we can do. So that's very important. Look at level 2 program as well, where I cover the window, where I cover the doji, where I cover the stars. In level 1 you will see the four bullish patterns, the four bearish patterns. In level 2 we will go more detail into doji, the window and the stars. Every concept, like the doji has 20 videos, the star has 20 videos, and the window has 20 videos, and each of these 20 videos has a chart example. So we are looking at everything from practical perspective. We are not going into theory at all. We just want to look at charts and see how we can decode these patterns. Okay, shadows can overlap, but real bodies must not overlap. The real bodies must not touch each other. So let's quickly have a look at an example. This is a daily chart of Jindal Steel. It's a star after an uptrend. So it's a nice uptrend as pointed by the blue arrow. Huge long white candle. Okay, the bulls are in complete control of the market, and suddenly you have a star. Now coincidentally, this is also a shooting star. If you remember, the upper shadow is more than twice the height of the real body, and it's like an inverted hammer. Okay, so it's a star because the real bodies are not touching. Shadows are probably touching if we have to go and measure. I don't think this is the rising window. It's a star. So now this star indicates indecision. It indicates confusion in the market. Now the bulls are very happy here, but by the time this day closes, the bulls are in doubt. They are thinking, why is this long upper shadow here? Maybe the price will reverse completely. So from here I would exit my current position. So if I have taken a long position here or here or here, this is the right time to exit, because I never know whether the price will go flat or it will go down from here, but chances are very low that it will go up from here. Sorry, chances are very low it will go up from here. It might go sideways or it might go down, because it has, because it is stopping the prior, this candle is stopping the prior uptrend. Okay, so in this case the market has gone flat, not down. So if we would not have exited at this star, then our money would have been stuck in the market for so many days. Like from here till here, our money would have been stuck in the market. And if you would not have exited here, or if you would have taken a short position here, then your stop loss would have been hit. Please understand that this is a standalone shooting star, not confirming prior resistance. So it's a risky trade. Remember the video we did on the shooting star. Go back and watch all of these videos again, because if you are a beginner trader, this information might be new to you. I am covering a lot of concepts. I am just touching the surfaces. So I want you to go back and learn this again. Watch this crash course multiple times. Repetition is how we learn. My coach, guide and mentor Robert Kiyosaki always keeps saying that the repetition is all how we learn. The more times you watch this, the more insights you will get from this, because I am speaking from experience. So I keep talking on these charts whenever I look at them. I don't have a script. I just talk because I know how to analyze the markets now. But for you, if you are a beginner, maybe you will have to go back and listen to this again, which will give you more insight. So this is a standalone shooting star, not confirming prior resistance, and our stop loss would have been hit if we would have kept our stop loss just above this resistance point. But this being a star, I use it to exit a position, not to initiate a new position. Okay, so this is how a star was successful in stopping a prior very strong uptrend.